It's great to have you back. You do point out that some of these elements of inventories in tech, the idea that maybe we're at the beginning of some cuts to estimates, provide reason to be cautious, right?
There's certainly reason to be cautious in certain areas of technology. Technology is outperforming today, but if we look since the Jackson Hole speech in mid-August, technology has underperformed. So that underperformance has really been concentrated in semis, hardware, and the more speculative names of technology. So we continue to think those are probably going to be the laggards, even though we see a little bit of outperformance today.
Do you think that CPI next week presents challenges or opportunities for tech?
Well, I think a lot of the bounce we've seen the past couple of days is based on optimism of the CPI numbers. I do think that inflation expectations have started to come down. We see that in break-even rates for tips. And I think the market is hoping that we get another good print for CPI, and that gives a bit of a lift to technology.
Youngyu, how are you filtering for quality in enterprise tech right now, particularly in software, whether it means growth rates or net revenue retention? What are you looking most closely at in terms of metrics?
Probably growth rates, being able to hit their targets, maintain margins. I think all of those are key factors right now. We do think enterprise software broadly is going to hold up pretty well. We think IT spend for corporations is still pretty stable given the tight labor market. It's pretty much top of the stack expenditures for companies. But as you mentioned, cybersecurity is certainly at the top of that top. So within that, there's certainly some variation. But we're looking for companies that are giving stable guidance, companies that are hitting their numbers, and where we see the money continue to flow. So we think that enterprise software is still a stable place to be.
Now, what about consumer exposure? I mean, for example, Apple has big consumer exposure, has big exposure to international markets, and yet it's held up pretty well because of the other things it has going for it. How are you sort of factoring in those types of exposure, perhaps companies with exposure to the PC market, given that the consumer has been showing some signs of weakness?
Yeah, definitely the name of the game now is about end markets and what specific markets and products are being utilized. And most of the consumer markets are pretty weak. Certainly PCs are weak, both for consumers, even enterprises showing some weakness. But Apple's a bit of a beast into its own. So it's difficult to lump that in with the overall consumer category, given the strong products it has, the positive network externalities of people using more and more of their products. So we sort of separate Apple from the consumer space overall. But we do think that the consumer, by and large, is pretty full of hardware. So we're still shying away from the PC sector. We think that has a ways to go before it actually reaches bottom.